delighted to announce the findings of the Cushman Wakefield Retail Property Outlook for 2017. 2016 was another strong year for the retail investment market. Our retail investments team demonstrated their dominance in the market, advising Home Consortium to secure their lead position in the Woolworths' pending disposal of the Masters portfolio. Cushman Wakefield have bolstered our retail service lines, which will leverage our leading position in Asia, Europe and the Americas.
I think creating great experiences is more important than ever. In a day when people can buy anything, anywhere, anytime, online, we're fighting for a share of their time as well as their wallet. So it's really critical that we create great experiences that are local and unique and authentic to the market that they sit in.
Cyclical and structural factors are reshaping Australia's retail landscape. In the short term, we've got cyclical factors like the economy and interest rates, which influences how much we've got to spend and where we invest our money. But at the same time, there are major structural changes happening in demographics and technology, which is changing the way we live and shop.
So mixed use is the latest retail development response to meet the changing needs of inner city populations.
At Frasers, we approach every retail opportunity with absolutely no preconceptions. We rely on research and community feedback to develop our centre design and leasing strategy, so it's all bespoke.
Retail property's relative value proposition continues to drive demand from investors. The question is, are we at the peak? If interest rates continue to remain low for longer, we foresee modest yield compression than what we've seen in the recent past.
Developers can start looking after those that innovate, those that actually bring something new to the table, which basically increase residential and commercial property values by doing something different.
Whilst e-commerce still plays a relatively small portion in total retail sales in Australia, approximately 7%, it acts as an important tool or gateway for global brands to gather confidence to touch down and open their bricks and mortar stores. What we're about to witness is the next wave of the first to market global brands.
Increasing tenant demands, combined with a lack of quality opportunities for tenants, has spurred a major redevelopment phase of key assets in prime locations across the eastern seaboard.
2016 was a record-breaking year in terms of where property yields ended up. Capitalisation rates and discount rates have never been lower and are now sharper than the period before the GFC. With investor sentiment and market conditions still quite strong, we think this trend will continue in 2017.
Neighbourhood centres continue to remain the flavour with investors. $1.5 billion worth of neighbourhood centres were transacted last year.
Budgets need to take into consideration master planning, large incentives, support, and just not a sort of 3-year play. It's like, how's this going to look over 10 years and how can we make a difference from a developer's perspective?
We trust that the Cushman Wakefield Retail Property Outlook for 2017 has been informative. We've had some great input from our agents in the field, our panellists and our researchers. We look forward to converting those ideas into action with you in 2017. Thank you.